Welcome to Fall into ETF Investing. On today's special episode, our panel of guest speakers will be discussing Beyond the Stock Market, Alternative Assets Explained.
Welcome back to ETF Market Insights. I'm your host, Erin Allen with BMO ETFs. And today I have the pleasure of hosting our final episode of our Fall into ETFs special series. I hope you've enjoyed the last 3 videos. Today we're going to discuss alternative asset classes. With traditional investments becoming more correlated, finding assets that offer diversification is important for investors' portfolios. Beyond stocks and bonds, alternative asset classes like commodities, real estate, even art and crypto can be effective diversifiers in your portfolio. In this episode, we'll talk about the importance of alternative asset classes, the challenges investors face when gaining access to them, and some ETF solutions that can allow you to think outside the box, so to speak, to look beyond traditional stocks and bonds and help you navigate increasingly volatile markets. Before we get started, a quick reminder that we are not providing any investment advice or recommendations today. Today is all about education. Joining me today for this conversation is Jimmy Zhu, Managing Director and Head of Liquid Alternatives at BMO Global Asset Management, and Andreas Rincon, who heads ETF sales and strategy at TD Securities. His team advises investors on the ETF landscape, and he publishes a wide array of ETF publication and works with TD's ETF market making team. Welcome, Jimmy and Andreas. Thanks for joining me today.
Thank you for having us. Thanks for having us.
Good to have you. Jimmy, let's start with you. Talk to us a bit about where this trend towards alternative asset classes came from and what really sparked it.
Sure. Alternative assets isn't really a new phenomenon. If you think back in the 1990s, institutional investors like pension funds were already using alternative assets to try to enhance returns and create uncorrelated return streams against their pension portfolios. And since then, alternative investments has really started to take off after the global financial crisis, when interest rates were glued at zero. So investors were searching for different ways of earning higher income in a period where interest rates were 1-2%. So alternative investments has been very popular in the pension space. But more recently, think back in 2022, when bonds and equities both sold off by more than 10%. So your traditional balanced fund investors suffered one of the biggest losses that they've ever experienced. So since that episode, back in 2022, investors are now looking for other return streams that can be less correlated to bonds and equities to seek more stability in their portfolios. And obviously, with the advent of ETFs and alternatives ETFs, that access is a lot easier now than it has been over the last 10, 20 years.
Absolutely. So looking for those products that are going to zig when the rest of the portfolio zags. Innovation, it seems, is really key to the growth of alternative asset classes. Andreas, talk to us a bit about how the ETF as a vehicle has really helped push this forward.
For sure, and sometimes innovation comes from different angles. And in the case of ETFs, part of that innovation in alternatives has come from regulatory changes, actually. So in 2019, we had a change in the rules here in Canada when it comes to liquid alternatives. And since then, what we've seen is the flourishing of a lot of the alternative strategies in Canada. Some of those changes, what they allowed to do is basically the funds are now allowed to sometimes borrow more, they're allowed to short more, they're allowed to have more concentration and more leverage in total. So that actually allowed the funds to basically give more options. So now you have the option to leverage more and create long shorts. You have leveraged products, lightly leveraged products, and a variety of other strategies that were previously not available or possible under the ETF structure. So because of these changes now, the investor here in Canada is basically able to access a variety of strategies that weren't available before. Many of these strategies were also very expensive to the investors. Many strategies were not really accessible. They were hard to get into and get out of. And they were also very expensive, as I mentioned. Now the ETF structure has been able to implement these strategies in a much more cost-efficient basis. It brings, once again, a variety of strategies here into the ETF market in Canada.
Just another example of how ETFs have democratized investing.
That's right.
Jimmy, BMO recently launched accelerator and buffer ETFs, and I think this is a great example of this innovation. Can you talk to us a bit about how these work and what these are really bringing to the table?
Absolutely. The buffer ETFs are one of my favorite alternative ETFs that are in the marketplace. So the buffer ETFs allows investors to be invested in the S&P 500 without the currency risk, but at the same time being protected against the first 15% drawdown in the market. So it's like investing with an airbag, right? So you can be invested in the US equities market, still gain upside exposure. So when prices go up, you get to appreciate the upside appreciation, while at the same time, if we do hit a little bit of hiccup, you're protected against the first 15% loss. That comes in an ETF form, which means that it's super liquid, you can trade it all day, and all the complexities involved is handled within the ETF so that the investor doesn't have to worry about the options positions that are embedded in the program.
Yeah, we call them defined outcome ETFs, right? Because you kind of know a little bit about what you're going to get at the end of the day. And
For
that's
sure.
Definitely an
Yeah,
innovative
when you
solution.
buy a traditional ETF or an equity ETF, markets may be up 20% and may also fall 30%. But with a defined outcome ETF, after 1 year, you have a better sense of what you could expect in the ETF, whether it's getting downside protection or upside capture up to 8 to 10%.
Yeah.
And in times actually of a lot of volatility, when you want certainty, this is exactly what these products offer you.
For sure.
Yeah, and for an asset allocator perspective, it's fantastic because if you're a little bit worried about the market, you don't want to market time, you can be in the market, but still protected on the downside. So have your cake and eat it too.
Okay, great. And Andres, can you give us some examples of other alternative asset classes that investors might look at within an ETF?
For sure. I mean, the way I like to look at it is you have ETFs that give you exposure to alternative asset classes and ETFs that are alternative strategies, that offer alternative strategies. And I would separate them into two. So if you look at alternative asset classes, you have ETFs that give you exposure to gold, you have ETFs that give you exposure to commodities and a variety of different areas that have different return profiles than your traditional equity or bonds. Those have been around for many, many years, obviously, and obviously gold has been around for many, many years. But people have often and for a long time invested in alternative assets, including infrastructure, including real estate, for example. And then you have other ETFs that give you exposure to alternative strategies. These are traditionally strategies that are still in the fixed income or equity world, or combination of that and also alternative assets, but then offer that in an ETF structure. So that can be a long-short fund, it can be a leveraged fund, and it can be obviously a defined outcome ETFs, which within that world you have the accelerators, you have the buffers, and you have defined outcomes. So many different types of strategies there. So it is a big variety of options that you have, and it is great to see for the Canadian investor that they have access to both the alternative strategies and alternative assets to the ETF.
Absolutely. And what are some ways that investors can actually go about incorporating these into their portfolios?
So the way we usually see it is either you put a big part of your portfolio or a larger part of your portfolio into these assets, expecting different correlation from these specific assets over time, or you do it in a tactical way. So what we see often in institutions, and Jimmy can talk quite a bit about this too, that you did that for quite some time, we often see an institutional client come in and basically put a tactical position in an alternative strategy for a period of time, depending on what the market is doing, the conditions, the volatility. So they'll go in and out, let's say, out of a gold ETF or defining outcome ETFs, depending on what they want, what they're seeking, protection or a different correlated asset at the time. While for the investor that's putting something there consistently, it's something that they have a long-term view on how this specific asset class impacts the portfolio over time, and they like that profile of that asset. And we see that quite a bit. It tends to be a little bit more sticky there.
Perfect.
And just on top of gold, well, we have seen that adding a portion of gold into your overall bond equity portfolio can significantly reduce the overall volatility of the portfolio and also make your portfolio a lot more resilient to inflationary pressures, like the type of pressures that we saw back in 2022.
For sure. That's great. And then I think we're in for some exciting times ahead when it comes to alternative assets, but talk to us about what you guys are most excited about. Sky's the limit in terms of innovation. So where are we going with these products?
Yeah, I can talk a little bit about that. At BMO Global Asset Management, what we're focused on is bringing some of the tools that institutional investors and high net worth investors had always access to, but bring that into the masses so that it's more accessible by all investors. And that's including wrapping some of those strategies into ETF wrappers so that people can buy them, trade them off the exchange without needing accreditation, without needing an
advisory then, right?
Without even an advisor, they can do that themselves. And just to help them construct better portfolios that are more resistant to the change in macro environment, the volatility that we're seeing. And I think that's, to me, one of the most exciting things that alternative ETFs can bring to the investors out there.
And what I'll add to that is BMO has already been growing a lineup of buffer ETFs in Canada. And as I mentioned earlier, the defined outcome space is broader than that. There's a lot of different strategies that can be offered, and Canada's just starting. So I suspect that BMO will continue to grow that lineup, and we suspect that the environment as a whole will grow, and we're going to see a lot more strategies and outcomes really for investors. So I think that's really the future, and that makes me really excited.
Okay, I think that's really exciting. I'm excited to see where this goes, and I think it's great that we're giving investors so many portfolio construction tools to help build better diversified portfolios. Thank you guys so much for joining me. I appreciate all your insights today.
Thank you for having us.
And thanks to our viewers for tuning in for the past 4 weeks of Fall into ETFs. We hope that you've enjoyed these videos. Please remember to like and subscribe. That's all for today. We'll see you next week. Bye for now.